Welcome and good morning, everybody, to another day of Talent Talk. We have got your boy with you today, Steve. We have got Jurgen Robinson in the background coming in. Woo, 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 woo. And we've got Davina Clardy with us.
Woo! And again, my head is big, and I didn't get the memo about the shirt. Come on, guys.
Oh,
You know what?
that one.
For me, it's almost been, it's almost become the wardrobe for Talent Talk.
Oh, I don't have a short sleeve John L. Scott shirt, so I think that is the next thing I need to do for the summer is get a sleeveless John L. Scott shirt.
Totally easy. You got a pair of scissors?
Today would be the day for that. Today is going to be the day for that. We're looking at like touching like 100. They say in Olympia it's going to be like about 93. So it's warmer down here.
Yeah. It'll be interesting to see how hot it's going to get. I mean, be around me. It's always hot, right?
Oh my gosh.
We need a bumper for like Jurgenisms.
Yep. Happy Monday, you guys.
Happy Monday.
Happy Monday.
Yes.
Start to a new week. I'm excited. We got lots of good things coming up, which we're going to be talking about a little bit later. Mm-hmm. But I'm also excited about today's topic, which we're going to be touching on here when we're going to be talking about lending and hard money lending. So
money.
I
guess that would not be complete without jazz hands, right?
Right?
Gosh. All right. Well, since we are talking about hard money today, all right, we actually, should we get into our trivia question? And I don't know if people really know what hard money is, and that's kind of what we're going to be talking about. And I think we were going to talk about that a little bit, but that's actually a question for our guest too. So we can even save that for when we bring our guest on. Do we want to even go right into our trivia question or want to have a little bit of chat
Yeah,
first?
and when we say hard money, we should probably put a appendix on there of lending, hard money lending.
Right.
Because when I was thinking about hard money, soft money, like dollar bills or coins, not that kind of hard money, soft money.
No.
Hard money lending.
I've not thought about that before. I think of paper money.
What's that?
You call bills soft money?
No, not really.
Oh.
Trust me, I don't call coins hard money either.
That was a new one. Okay. So super excited to talk about this. And let's go right into our trivia question then.
All right.
So go. Is that you or me, Steve?
That would be Jurgen. So, that's me, I guess, to read the question. So here's the question. All right. Trivia question for today pertains to hard money. How many credit bureaus is a hard money lender required to report to? How is it? A, 0, B, 1, C, 3, or 5? D, 5. How many credit bureaus are they supposed to report to? So
that's a good question.
Don't Google it, but put your answer in the comment section and let us know.
Yeah. See, like this, my hand looks huge. Like this, it looks tiny. Big, tiny.
Yeah. So, okay, our guest, bless your heart, girl. This is what you get in the mornings, I tell you. So, all right. So here we go. We are going to go ahead and introduce our guest, and she's a super special lady. I've known her for many years, and I want to say not only is she a mom and a wife, she also licensed real estate agent, investor. She also was a foreclosure auction representative, and now she has merged herself into the private money lending world. So this lady knows it all. She's got the gamut. She knows about the auction properties on market low. I mean, you talk to her about investment, and this is her wheelhouse. And so she's an amazing gal, and want to introduce, she's with Eastside Funding and Inland Capital, our friend Cambria Johnson.
Hey, welcome.
Hi guys. Thanks for having me. I'm great. Happy to be here.
Thanks for coming, girlfriend.
Yes, this is a great way to start a Monday off. You guys got lots of energy.
Yeah, Davina can say that. That would sound a little weird, kind of. Welcome on, girlfriend. Doesn't sound the same coming from me.
Not really.
Good morning, Pat.
Hey, Pat. So I know people have, we've been talking about, and you heard us on your backstage, we're talking about hard money, and we didn't even explain really what it was. So I guess, how about you do the honors for us? What is the difference, or what is hard money?
Yeah, so hard money is essentially, it's almost like, it's the closest thing to cash that we can get in the lending world. So there's no contingencies, like there's no contingencies for an appraisal report. There's not a minimum credit score requirement. There's not a minimum of liquidity that a borrower has to have available. It's really, we base it solely on the acquisition, not the borrower. So we're acquisition-based lending. Is really the best way to explain it, so that the lender is always in a safe position, because our loan to value is in a good enough ratio to where if something drastic were to happen in the economy, or if the borrower, were to default on their loan, the lender is still in a good position on the property.
Okay. So just for clarification, so if you wanted to purchase a property and compete with cash, and you don't have the cash, then they need to talk to you to get.
This is the next best thing.
Okay.
Yeah.
All right. I think we got it.
Yeah.
So, and I know, Steve, I don't know, Jurgen, if you want to take another question. That.
Yeah, I guess if next best than the cash, what is the difference between, let's say, maybe hard money versus cash versus like conventional financing?
Sure, it's great. So we're definitely that in between. I always explain to people we're the gap financing if you need it, or the bridge financing to get the client from point A to point B of where they're trying to get. So conventional financing interest rates are right now, they're amazing. They're anywhere in the 2s and 3s. With hard money, they always float, well, especially with Eastside Funding and Inland, we're always between 11 and 12% interest only. And Eastside Funding is always at 12%. They have never deviated from that since day one. And then Inland will sometimes float between 11 and 12, depending on what the property is. There are other hard money lenders that offer some better terms between, I would say the lowest rate that right now we can get is about 8.99, but there's more involved in it. We do have to pay for a BPO. We also need a little bit more information from the borrower. So if in terms of just quick, like I need to fund this property in 72 hours and I don't want to jump through a ton of hoops, I'm going to stick mostly towards the Eastside and Inland model, which is 12% interest only, and we usually can fund in about 3 business days. Half the time we're waiting on escrow to get us a prelim title. I mean, our docs are already there. So it's really quick. People are always surprised how fast it can go. And there's very little with the qualifying process.
Gotcha. That's interesting because, we have a tendency in real estate mostly to think about traditional mortgages and lending types of things. But what you serve is not necessarily the standard buyer, the residential buyer. You have the reason your terms, everything are different is because you're really serving a more segmented or specific purchasing group, right?
Correct. Definitely. We work with investors, builders, and occasionally somebody that will ultimately have maybe their primary residence. It's just they need interim financing until the property is completed, and then they can refinance into, permanent financing there. So there's all sorts of scenarios. I mean, I could give you some examples of what I just did last week. I mean, they're all different. So yeah, exactly.
For buyers
With
who
regards,
are,
go ahead, Steve.
I'm sorry, go ahead.
Well, I was just going to say back to you. Is it Jurgen? Am I saying it right?
No, Jurgen.
Jurgen. Okay. Our parents gave us unique names, right? We thank them for that. The biggest question that I get asked is, how hard is it to get into this, and what do I need available? And there's so many options with that, where people can have very little to, if they have equity in a property, or if they have a family member that can loan them a partial down. Like there's no textbook answer to the scenario. It's very based on that borrower and that property. So I love getting them, here's what I'm trying to accomplish, and then here's what I can offer you.
Nice. And there was actually a question in the comments that came through from Pat too, which was, it's a two-part. What would be minimum timeline to carry, and what upfront costs are there?
Sure. Minimum timeline to carry is 30 days, and we can write it for as long as 12 months. If the borrower needs something past 12 months, then we probably would need to look at one of the other lending options besides Eastside or Inland that can go past a year. And the minimum, what was the second portion?
Second question was, what upfront costs are there?
Sure. Okay. So you have, with regards to closing, of your title and escrow fee, so standard state mandated rates. And then we have our prorated interest. So depending on what day of the month we're closing, they will collect interest. So if we're closing on the 25th and there's 5 days left, that they'll prorate that. And then the only other fee they'll have is their homeowner's insurance binder. We collect that at closing. That's typically between $900 and $1,500, depending on the property. And that's it. So I would say total and closing costs is usually right under 2%.
Nice. And I know Steve's got a question here for you, but it's what's kind of interesting and kind of fun is you're actually not you're answering questions really directly and fully. A lot of times when we have conversations, it's just kind of a surface one. It's kind of cool.
Okay.
Yeah. No. I'm saying
this is my first time doing this, so
that's perfect.
Okay.
We'll be easy on you then.
Yeah.
Yeah.
So, oh, go ahead.
Oh no, I thought Steve had a question.
I was just wondering, with everything that's going on right now, just with the COVID-19, how's that affected like the investors and the purchases in hard money lending in general as compared to prior to?
Thankfully now we are almost back to where we were pre-COVID as far as the terms, what we were asking for down payment. When COVID first, back in March, when things kind of really got serious and they shut everything down, I think everybody was just so uncertain and unsure where this was going to go. So we definitely scaled back. We asked for higher down payments between 20 and 25%. We wanted to lend to experienced borrowers that had done this in the past. And I would say we're almost back to where we were pre that, because we can see the market is sustaining this. Rates are still fantastic. And the only difference I would say now between before is we call it the tri-counties, Pierce, King, and Snohomish. Those are our strongest counties, obviously, right now. And so anything outside of that, like I've got a borrower that's closing in Grays Harbor, and there's still amazing deals down there, but they're asking for 20% down versus before we were at 10%. Thurston County, they're asking between 12 and 15% down. But again, I think that within a month or so, we'll probably be back to our just regular, 10%. which I'm probably jumping ahead because clients are going, wait, 10%? Is that what I need for my down? So yeah, we're almost there. So we're in the upward swing of getting back to where we were, which is great.
Right. So, Jurgen, go ahead.
No, David, you got it.
Okay, so this is great, and I think some of us that kind of have our heads wrapped around this type of purchase are okay, but there's some that are probably like, my head is swimming, and there are people that are watching, flip it or flop it or list it or lose it or whatever, right? And they're like, I want to do that, So, how difficult is it, or what advice would you give someone who's looking to do a flip, or right now there's a lot of people that are even buying purchase and holds, like they're buying rentals, but they just don't have the financial resources, or even maybe the down payment seems to be a lot for them to swallow. And is this just in general, you've been in this industry for such a long time, what advice would you give someone who's saying, I want to do something, but I don't know what to do?
Yeah, there's been lots of different scenarios we've helped clients get in. Sometimes they'll find somebody to partner with where they can share the costs just to start in and get their first flip underway. There's also options of, if the client has a property that is not a primary residence, that they have some equity in, we can do, it's called a cross collateral, where we will record a deed of trust on that property in lieu of a down payment. And so that's another option. And then we used to, and we might be going back to this, but we used to have a 0 down program or 5% down for those who were going to refinance the property and keep it as a buy and hold, such as a rental. And so as long as the loan to value was still there, which we want to be under 75% of loan to value, meaning if you are purchasing, we'll use easy math, you're purchasing a house for $75,000 and it's worth $100,000, then we're at 75% of loan to value. Then we will loan with as little as 0 down. But right now we could be at 5% down, but maybe we'll get back to the 0. So there are options out there for sure. They don't require a lot of money in reserves at all. They just want you to have enough money to service your monthly payment. And that's about it. We just want the borrower to have a really clear exit strategy. Are they flipping it, or are they keeping it as a rental? And then depending on that scenario, then we look at the big picture, make sure they have make sure they have a conventional lender in place. If they're going to keep the property, we want to make sure that they're pre-approved to do the refinance. Or if they're going to flip the property, we want to make sure that I am seeing the same value that they and their agent are seeing for resale type. So,
yeah. Okay. Hey, Cambria, David, I thought that was a good question because, there are a lot of people that are watching TV, and we see it just in residential real estate. The house hunter is just one of 3 properties. When we know that's not necessarily the case, and that's not how you negotiate. And so they are watching things like the Property Brothers or Flip or Flop or things like that. And they're getting conceptions of what it is. And then they get involved in it and then realize, oh, this is really different. As a piece of advice, if there was a single, maybe it's 2 or 3, maybe it's more than that. But what would you say is the biggest mistake you see people make when they want to get involved in flipping properties or using hard money lending?
I would say the number one biggest mistake that I see them make is having their budget and their contractors in line, because we have a lot of clients that go in and say, okay, this is how much I think fix up is going to be. And then it ends up not being that because they never had a professional contractor come in and give them real numbers. They just kind of said, well, this is how much carpet's going to be, this is how much paint's going to be, landscaping, but they don't look at the what ifs, right? The things that could possibly pop up that they didn't get accurate numbers on. And so that's that's probably the number one problem. And it doesn't arise often, but it's just making sure that you know what the property is going to entail for fix up, and then having those funds available to do it, because the last thing we want to do is have somebody run into a problem where they run out of money and the property isn't finished, right? That doesn't help anybody. We want them to succeed and we want them to get it back on. Or the other big thing is reliable contractors, right? There's a lot of people you can pick up and call in the phone book. Maybe, they're saying they can have this done, but really I would use contractors that have been recommended, that other people, your agent, or we can refer out, that we have used in the past. I think that's really important as well.
Yeah.
And just one quick follow-up question before turning it over to Steve, because it's not as easy as seen on TV. Do you have, like, if somebody were to reach out to you, do you have some resources or some ways of helping them understand at least how to get started?
Absolutely. Yes, we do. We've got a whole list of vendors that we work with regularly that we can send out our vendor list, which gets them a good head start depending on what area they're in, as well as if they need to be connected with an agent in that area or a lender for conventional financing, we can provide all of that information for them.
Cool. Steve?
Nice. So it sounds like you're a great resource, and just have all this. If you're an investor and you're looking at starting to get into investing, if someone wanted to talk to you about getting a hard money loan, how would they get a hold of you?
Yeah, best way to reach me is either on my direct number or my email. Do you guys want me to give that to you over the live? Okay. So my direct is 360-349-5555.
What?
I know.
That's like a Hollywood movie.
Is that a real number? It's back in the day when we had Quest. You guys remember that company?
Mm-hmm.
Yeah.
Back when you could request a number. And then for email, it would be ESF. So E as in Edward, S as in Sam, F as in Frank, and then rep, REP, @gmail.com.
Nice.
Awesome.
And we'll get that into the comments too. There we are.
Awesome. Well, Cambria, thank you so much for spending the time with us this morning. Pat says thank you so much for the info, and I'm sure as anyone else that's listening, this has been truly valuable and invigorating. Like, I'm hitting you up, girl. I'm hitting you up.
My pleasure, you guys. I get to talk about it all day, so I might have thrown out a lot, so people's heads might be spinning, but please call or email. I would love to chat with you guys or run any scenarios by and help you get a better understanding of it anytime.
Yes. And I will say that just in having communication, you've been working with some clients of mine too. So if there's a property, you literally call Cambria and give her the address of the property and how much the value is, and she can let you know about what the financeability of it is. So really great. So
absolutely.
Thank you so much.
Thank you guys so much. I had a great time.
All right. Enjoy the rest of your week.
Okay, you too. Bye-bye.
Bye.
Good stuff. I feel like I want to go out there right now and then find some sort of investment to dive into, take on a project.
Right.
I think I can.
You know what I'm saying? It's like gold. So anyway, all right, so good. Oh, and reminder, trivia question, right?
Mm-hmm.
Yes.
So credit bureaus, how many credit bureaus?
Hold on, I got you.
It's okay, I'm reading it. How many credit bureaus is a hard money lender required to report to? And what are the options? 0,
1, 3, or 5. If you're saying 5, that's probably not the right answer.
Are you giving a hint there, Steve? Are we ready for you want to? Do you want to answer? Are you guys ready?
Yeah.
Hold on just a sec. And I'm not sure if saw Chrissy back there, but she hopped in, so I'm not sure if she's got any context to that. But we certainly can give the answer. So for the bureaus, it was how many? 0, 1, 3, or 5. And Steve tried to give you a hint. There are only those out there. So if you answered 5, you are not right. If you answered 3, unfortunately, you're not right. Now it's between 1 and 0, and this is like a Dr. Seuss rhyme. 0 bureaus.
0 bureaus. So they do not run credit. So they are not reporting to any of the bureaus in regards to credit scores. So.
Yeah. And I hadn't put the trivia answer in yet. So when you're asking, are we ready? That's what I was saying. No, not yet. And then I had to remember, how do I actually spell bureaus? Because that word is just a, you would never, I would have been knocked out of the spelling bee right there.
You're funny. You don't know how to spell bureau, Jurgen? I'm just kidding.
I do now.
Oh, gosh. All right.
So, Steve, we got some updates, right?
Yes, we do. We've got some updates and just some events coming up. So just wanted to kind of keep you guys in the loop of what's going on. So tomorrow, we've actually got a jumpstart class going on where if you're looking at getting into real estate, maybe you're taking your pre-licensing class, this is a great class to come into and learn just a little bit more about real estate. Then we also have a career night tomorrow evening from 5:30 to 7:30. And if you are contemplating getting a real estate license, this will be a great workshop to attend. We will go over everything entailed in order to get your real estate broker's license, and that's 5:30 to 7:30 tomorrow evening. Wednesday, for our John L. Scott Talent family and our brokers, we have our office meeting at 9 a.m. So stay tuned for that. We've got lots of good stuff going on. This Thursday coming up, we have a training class at 10 a.m. with Wendy Lunt, who's going to be covering how to make a social media ad where they zoom down into a property from Google Earth and make it look spectacular. So I'm excited to see what we can do right there. That's going to be great. And then, as always, we've got a Forms Friday class coming up at 9 a.m. on Friday. So that is your quick tips or quick update and events for this week.
Yeah.
Awesome.
I missed giving you banners, so I'm sorry. You had to. Everybody out there actually had to listen this time.
All right. Well, this is it. Is it time for the song? Now.
Yeah. Say goodbye to all our family.
Yeah. So no, this was good. So yeah, we're looking forward to just a really great week. Weather is on. It's summer is officially here. I don't know how long it's going to be around, but for sure it'll be here this week. So
congratulations to everyone who didn't skip work today. Oh.
I know, right?
Or maybe not congratulations. You're going to be looking out that window all day.
Yeah, 93 for the high today. And this week is going to be great. And we'll dip down Friday into the mid 70s. So there'll be a little bit of relief for those who say 90 is too much.
That is not dipping down to me.
Yeah,
that's getting good.
That's a dip. Okay. Just saying. So, but anyway, so just Jurgen, you're such a hothead. But anyway, so this is going to be a great week. So we're just really excited to be able to be here for another week, and we'll have another guest next Monday. We've got our week of things that are going on, even into Tuesday, Wednesday, Thursday, Friday. Stay tuned in, and then we're going to do it all over again on Monday.
Yep.
So, all right. Who wants to count us out on the Be Bold?
All right, you guys, here we go. You know how we do it. Start the week off great with the Big Be Bold. 1, 2, 3. Be bold.
Be bold. Bye.
Bye, y'all.